Good morning, everyone, and welcome to the last panel on financial services in this conference. I'm Buya, and I will be moderating this panel, and I'm joined by great speakers that I'll be introducing individually as I give them the first ask. Mr. Piers Stein, a retired senior advisor and global head of climate finance at the International Finance Corporation, an entity of the World Bank Group. My opening ask to you, given your background, is to give us some context, looking at the financial health of the African continent.
Pleasure to be here. I spent the last 25 years primarily focused on access to finance and financial inclusion. So this topic obviously is dear to my heart. And a lot of this work was focused on Africa. So it's a pleasure to be here with Aitwes and Martin to discuss what the future holds for financial inclusion and financial health in Africa. Just to provide some context, access to finance, of course, is not just an issue in Africa, it's a global issue. And just a decade ago, only about half of the population had access to a bank account. Now that has increased over time. Today, less than 1/3 of the world's population remains unbanked, but that's still a very large number. There's about 1.7 billion people around the world who do not have access to a formal bank account. But it's not just bank account, it's really a range of financial services that really contribute to the financial health of families. And that includes being able to send money home, to put savings away, or to access loans when you need them. And so that range of financial services, of course, you want to be able to access in an affordable manner as well as in a convenient manner. Now, COVID, of course, has disrupted a lot of that, and that is felt in so many ways for all of us. And one of the ways, of course, is also being felt through financial services. But that can play out in two ways, of course. One is that we've seen that some of the infrastructure and innovation that has been put in place can really make a difference in easing some of the impact. For example, government payments that can be made through digital payments and reach the recipients almost instantly, of course, can have a very direct and important effect rather than having to send those payments through checks that then have to be cashed in bank branches that are miles away and where there's a lot of delay in actually getting money to help in those situations. Nonetheless, we see that if you look at international remittances, for example, the impact that COVID will have, the World Bank estimates will lead to a drop of 20% globally of what families will receive through money being sent home from family members working abroad. And that will be felt very much so, because in 2019, global remittances stood at $550 billion, which is more than foreign direct investment in emerging markets combined. And so a 20% drop there, of course, would certainly have a ripple impact on many of the economies, including in Africa, where that impact may well be even higher than the 20%. But these are just some of the global examples. And I do want to mention that when we talk about financial health, a lot of the focus, of course, is on households, families, but it equally matters for businesses, in particular small businesses. And small and medium-sized businesses constitute the lion's share in many economies in terms of their contribution to jobs and growth. So it matters a lot how financial services are being provided to them. And for SMEs, it's less the issue of access to accounts. It's more the issue of having access to loans and financing that they need to grow. And the global credit gap for small and medium-sized enterprises is estimated at about $5 trillion. And that, of course, is a huge number. And I'll get now to the numbers for Africa, because I think that is what we want to be talking about today. So Africa still is lagging in terms of the global impact, global access to financial services. So I mentioned that about 2/3 have access to a bank account around the world. It's less than 50% still in Africa. It's about 43%. But it has almost doubled in the last 10 years. And I think to the topic of our discussion today, a significant share of that growth has really come from innovation in the digital and mobile money space. And that has, and this is really a space where Africa has leading the world and where we've seen some of the greatest innovations and also progress being made across the world. So based on the latest data from Findex, which is a survey that the World Bank conducts with funding from the Bill and Melinda Gates Foundation every 3 years, looking at adults around the world, 1 out of 5 adults in Africa has a mobile money account. And that is 4 times higher compared to the global average, which is 1 out of 20 adults. And that has seen rapid increases across most of Africa, with huge innovations that, of course, we want to be talking about today. And the potential to further increase access, leveraging mobile technology, is still quite significant, because about 50% of those who are unbanked do have a mobile phone. So that, of course, allows for a significant growth yet to come when we look at how do we reach how do we reach families and households with financial services. On the SME side, so the small and medium-sized enterprises, the credit gap in Africa is estimated to be above $300 billion, about $330 billion. So that's a significant amount, and certainly that is where financial services have yet to catch up at the same speed as we've seen with access to mobile money payments, for example, because that is where still much more progress is needed to unlock that tremendous potential for jobs and growth in Africa. Let me stop here for now, and let me hand it back to you, Buya.
Thank you very much for that context. Actually, it's a good segue to introduce also Ms. Aitoa, since you mentioned that a lot of that access has been driven by innovation. And Ms. Aitoa Kola Oladejo is the Executive Director of Financial Service Innovators with more than 20 years experience in banking. So maybe the question to you is that through your work, probably you had supported a number of fintechs that tried to disrupt and bring innovation in the financial services, especially in Nigeria. Maybe you could share more about your role and the role of legislation in general and infrastructure to enable that innovation to happen.
Thank you very much, Buya. It's a pleasure to be here, talking side by side, Martin and Pierre. Yeah, like you have introduced me, my name is Aitoa Kola Oladejo, the Executive Director of Financial Services Innovators. Yeah, I've been in banking for over 12 years, and also I was the head of research and development at the Central Switch in Nigeria, the NIBS, Nigerian Interbank Settlement System, where I led an effort to empower fintech startups and enhance financial innovation. And I felt that there are several gaps in the financial services space across Africa. Pierre has spoken to that already. Access to finance was one, cost of financial services was another, and we felt that innovation was a way to drive down the cost of financial services, and also that an enabling infrastructure had to be put in place for fintechs to be able to thrive, especially the young ones, innovators coming up that didn't have infrastructure. In Nigeria, for instance, it's a highly regulated space, no access to APIs, no access to data. We don't have an open banking framework. And I think that cuts across Africa, maybe very few economies in the African markets. I had a session recently, most of the African markets don't even have access to open banking infrastructure APIs, just like you have in Europe and in the UK. And so innovating was quite difficult. So what we did at FSI, Financial Services Innovators, was to put in place an industry innovation sandbox. The industry innovation sandbox was launched about a year ago, and we launched with 3 pioneering APIs from NIPS. The BVN APIs. BVN is the bank verification number. That's the identification of every banking individual. And so it gave innovators access to be able to do stuff in the financial services. Today, we have 10 institutions on the financial institutions participating on the sandbox, including 2 regional banks, EcoBank and Stanbic IBTC. We also have Swift, the global messaging platform, on that sandbox. And we've organized challenges, hackathons, like you're currently doing now. We've seen very interesting solutions being developed and come forward. Our model also is to introduce these startups to partners in the ecosystem. In Nigeria, it's very difficult, even though you have a great solution, access to market might also be difficult. One, you need to get a license. Talking about regulation, access to a license, you need for a startup in Nigeria today, you need about $100 million. 100 million naira. 100 million naira would be about $500,000. How many startups would have that kind of money to put in place like a collateral deposit? They don't have access to that. So what we have done with our model is, once you develop a solution, and we have done that with about 6 startups now, we introduce you to a commercial bank, one of the partners that have given access, and then you could launch a solution. Once you're able to raise funding from anywhere, from the VC ecosystem within Nigeria or outside the country, then you can now apply for a license. But then we'll have tested your solution, the prototype. You will have improved on the beta version that you would have released in the markets. And so it makes it easier. Some other things I would say about legislation is the regulator can either be an enabler or or a disabler, if you ask me. So recently, in the month of April, there's this popular financial service solution, OPay, being driven by a Chinese company, Oride, where cyclists, they operated the Uber model, but for cyclists. And I saw a lot of young Nigerians adopt that model, order for a ride to take them to places, because even the road network is bad in several places in Africa, including Nigeria, but the government of Nigeria shut it down, and so people are back to cash and all of that. During COVID, access to finance was very difficult. Agent locations could not operate, even though we felt that agent location was a way to ameliorate the problem. So if an agent is like 5 minutes away from your house, it's easy for you to access financial services. However, the cost is high because the agents will put an infrastructure in place. Power is a problem. The telephone network is a problem, and all of that. So they add that to the cost of services. I believe that some services to the low-income earners should be free. And if we can see that happen, just like Kuda Bank is doing today and expanding outside of Nigeria to other markets, they just raised some money, about $1 million. That would enhance access to financial inclusion and would also bring down the exclusion rates. So when at times we talk about the exclusion rate, we also need to consider the micro, small, and medium enterprises. Africa is an informal market, if you ask me, it's more of an informal market. And their contribution to GDP is quite low because of their transactions are informal. So for instance, a trader is out there, you do a lot of transactions, at least you're getting by, you can feed your family and all of that, but you're not part of the system because the solutions being developed are expensive or they are not tailored to meet your needs. And so a collaboration of the regulator and several other key players is required to make these things seamless and to improve the regulatory landscape. So look at the M-Pesa model, for instance, in Kenya. The M-Pesa model is telco-led mobile services. PS talked about mobile financial services, right? Everywhere. Over 100 million Nigerians, for instance, have access to a mobile phone. In Africa, I think it's the same. A lot of people have access to mobile phone. But are those services offered on mobile, and what is the cost? What is in Ghana, for instance, you have the MTN mobile money. The MTN mobile money makes it easy for people to have access. So telcos lead that space. in Kenya and also in Ghana. But in Nigeria, telcos are not allowed to lead that space. Speaking about regulation again, so there are third-party players enabled, empowered, given the license, so you can take deposits. So there are e-money issuers, but they still have to compete with the traditional banks, because even the traditional banks are also giving the license. I think, in my personal opinion, that was a flaw of regulation. However, a new license has been created, which is called the Payments Service Banking License, that those with a large retail network like telcos or strong distribution networks will be given that license. Three institutions have been given, and we hope that post-COVID 2021, we'll see what they can do, leveraging on the license they have and their network to expand financial services to the populace, especially the low-income players.
Yeah, speaking of the mobile part you mentioned, is that I know, for instance, in Africa, 4G is still amounting only of 7% of total connections, and more than half of the population still don't have mobile subscription nor access to the internet. And I think this is where maybe it's important to bring Martin into this conversation, because he works actually around carriers and these elements. So Martin Koppel is the co-founder and CEO of Fortumo, and he will be bringing a Asian flavor to this panel. Just before we maybe dig deeper in that, I would like to ask you, I remember when we were talking during the briefing, you mentioned that you were considering expanding to the African market, but that didn't happen. So maybe you can share a bit more about your company, yourself, and the reasons that prevented you from going to Africa, and probably connectivity is a big one of them.
Thank you, Buya, and it's great to be here, and great to be on the panel with co-panelists. So yeah, as said, I'm Martin. I've been in fintech for 13 years, so working with the company Fortumo, and what we've been doing is that we've been helping digital services providers to provide their services in emerging markets mostly. So we do provide services in roughly 100 markets, but sort of we mostly are helping companies to reach those unbanked users. And sort of technically, what we do is that the companies can charge their services to the telco bill. So basically, if you don't have a bank account or you cannot pay with the cash for your Spotify subscription, then sort of there is an easy and simple way how to do it. And of course, throughout this 13 years, so we've been seeing different sides of the fintech and different sides of the payments business, and especially in the markets where the banking hasn't been extremely strong. So we can sort of take United States, we can sort of exclude also Western Europe. But when we're looking at different trends that have spun out during the last 10, 15 years in China, in Southeast Asia, also Middle East, but also in Africa, then it's actually an interesting mix. So yeah, as you said, we were looking into expanding in Africa. So right now our sort of core regions are, of course, we do business in Europe. We're helping companies like Spotify, Amazon, Google Play, Facebook, and many others to monetize their user base and provide their services. Otherwise, consumers wouldn't be able to get access to those services. But our core regions today are mostly Southeast Asia and now growing also Middle East. And I think sort of Southeast Asia is an interesting example where I would say that when there's a need and there is a will, then a lot of things can be done. So I would say 6-7 years ago, there wasn't much going on in the fintech space. There were sort of smaller pieces in Southeast Asia. There was a very strong powerhouse in China, but we've seen how similar models have been adopted, and the growth in fintech across different verticals, so payments, lending, insurance has been booming, and I'm happy to talk about that a bit later more. But when it goes to Africa, then back in the days, roughly 6 years ago, we were on that particular reason sort of looking the next growth markets, and of course Africa in general, mobile money development. Africa was way beyond everybody in terms of creating this new layer of financial services, which was sort of detached from the historical banking infrastructure. And that was the reason why we started looking into Africa in the first place. Why we eventually decided not to invest, and of course there are several reasons. One of the reasons is related to the carrier billing businesses in general, which was related to the fees. So carrier billing as such is associated with higher fees than credit cards. But yeah, in different markets, Kenya, Nigeria, Ghana, Tanzania, simply sort of the economics at that time didn't make sense for our customers. So if we're taking Spotify or any video streaming company, for instance, then they do have their licensing fees that they need to pay. And if the infrastructure fees are higher than that, then sort of economically it doesn't make sense. Regarding, I know this has changed, but back in the days, mobile money in Africa was very popular, particularly M-Pesa in Kenya, right? There were first wallets that were opened up, e-wallets that were opened up in Nigeria, and of course MTN Money, Orange Money, and everything else. And that was sort of years before those neobanks in Europe started to actually do something. And then I think those neobanks and then money remittance companies took a lot from African wallets and sort of tried to mimic the same logic and build it sort of on top of it. But back in the days, 6 years ago, the biggest issue with the different wallets in Africa was that they were sort of built in silos. There wasn't interoperability among them, and one wasn't able to send money from one wallet to another. So there was one really big powerhouse which was M-Pesa, which was really big and really dominant in Kenya, but all the other wallets were actually sort of as a standalone ecosystem. And in some cases, even if the wallet ownership was the same, then actually there wasn't an interoperability across different countries. So let's say if there is an MTN Money or Orange Money account in Ghana or Tanzania, people weren't able to sort of send money to their friends or pay for the businesses. So from one wallet to another wallet in that country. And I think roughly 5 years ago that started to change. So sort of the logic that together we can make the bigger difference rather than building independent infrastructures. And I think that has changed. But those were sort of the main reasons. One was the wallet adaptation, and even though they were popular, then it was still fragmented and there wasn't interoperability. And the other was our merchant need, and that was sort of blocked mostly by the commercial availabilities.
These like fees and like not like the unit economics not making sense, which probably relate to like the high costs and especially for the end user. Maybe Peter, do you have any comments regarding the cost of delivering financial services, especially for like the low end and the poorest of the population?
Right. Sure. Happy to talk to this. And some of the points that you made, Martin, about interoperability and so on resonates very much, right? I mean, we started a larger program in Africa together with the MasterCard Foundation about 8 years ago now. And interoperability has been one of the key issues, that we were focusing on there. And I'm sure that, Aichas, you have something to say about it as well, because I know that, it has been a concern for many in Africa, where we've seen the growth of mobile financial services, but often it was initially just seen as a captive way for telcos to capture value rather than really building common infrastructure that's shared and that really then becomes accessible to all at lower cost. But the main point that I want to make, and I think that's relevant in Africa, but elsewhere too, is that it's really expensive to be poor, right? Because you pay a disproportionately higher price for the financial services that you get. And that is even further aggravated if you don't have access to formal financial services. And I think we need to separate the two, right? So a lot of the financial services that are being provided now come out of the informal space. And that one, whether these are rotating savings and credit unions, whether these are savings clubs, whether this is what you get from the money lender, but of course, the financial lives of everyone, right, including when you're poor, or even when you are poor, right, when you have to manage limited incomes and savings that you have in a very, very tight way. It's very important that you don't lose money and that you don't pay too much for the financial service that you need to manage this, right? So I think if you look at the research that has been done on it, it's, however, staggering to see how much money can be lost with very simple financial services, right? I mean, so Microsafe did this research 20 years ago about savings in Uganda, right? Where you could lose up to $1 out of every $5 you're trying to save in some of these informal saving settings. It's better in the formal financial space, right, where some of these losses don't necessarily occur because financial services are then regulated. It's a bit safer, but then what you're facing, and I think that's to the point that we want to discuss here, is then still a matter of how much are you being charged, right? I mean, do you get access? So there are certain obstacles that you can face, whether this is IDs and other things that may restrict your access to financial services, or what ITS was mentioning, just being able to get to an agent or a place where you can open an account can be a severe constraint if you live in a rural area. But then it's also a matter, what are you being charged, right? And I think the cost of financial services, in addition to the convenience of them, is super important, right? And to bring that down is very important across all financial services. We had an initiative on remittances, right, where we saw that now if you send money home, a lot of money is being kept by remittance services providers, and we wanted to bring that down to well below 5% because we have a database on global remittances, and when we started, that cost point was close to 10%. And that's of course not acceptable. Not acceptable if you have to pay $1 of every $10 you send home, just for the service of doing that, right? That has to be much, much more efficient, and in particular where money is scarce.
Yeah, that's in a way really sad to hear, but I see that there is a lot of innovation trying to mitigate that, and maybe we could learn from the Southeast Asian market, and that's where I can maybe invite you back, Martin, to share some of the trends you have noticed. You mentioned earlier that you can share that later, so I think this would be a good time for that.
Yes, thank you for that. So actually, I would continue where Pierre was finishing. So I think sort of the logic why the services are way more expensive for underbanked people oftentimes is that service provider has to factor in different risks. And the biggest issue is that they don't have enough data about people, whether we're talking about lending, insurance, or anything, and the sort of lack of proper ID. So when you sort of jump into the waters and you don't know how deep it is, then you have to be ready for the risks. And I think that's the issue. Of course, I mean, on one side, we can also say that it's a service provider's greed associated to that, but being an optimistic person, I would want to say that in most of the cases, this is sort of lack of data or lack of knowledge. And when you have to give your money or anything related to that out, then lack of understanding brings a bigger risk, and the bigger risk typically in financial services brings you financial losses in the end of the day. But when we're looking, I would say sort of 6-8 years ago, when everybody was talking about mobile money or e-wallets, then everybody was talking about Africa. Yes, things were going on in China, but China has always been very, very special. But at that time, we also had a fair amount of our business happening in China. And it was actually very fascinating to see how, despite the fact that people had bank accounts, despite the fact that actually people had access to the different sort of financial services as well, how Alibaba managed to create an Alipay and everything around that, all the financial services. And that's actually pretty similar to how PayPal got big and how many other sort of payment instruments have gotten big, because they have had this driving vehicle. So PayPal had eBay, which managed them to grow. And then when we're talking about sort of in the context of hackathon, it's always when we're looking different financial services, then they have always piggybacked on top of something which has sort of driven them to a critical mass so that they could live on their own. So when we're talking about mobile money wallets in Africa, then a lot of them have been piggybacking on top of telco infrastructure. So that's created by the telco. There is a user need. But what's more powerful than just the user base is a user behavior. And that's something that Chinese companies did really well, especially, originally Alibaba, later also that was replicated with WeChat by Tencent and then WeChat Pay. But what they did was they also expanded the very same logic to many markets in Southeast Asia. So now when we're looking, there is Paytm in India. And there is GrabPay, there is OVO Pay, there are many different wallets. But actually, when they started off as wallets, then now everybody is sort of moving towards all-in financials. So when we're talking about Southeast Asia and China, then everybody's talking about super apps. So basically, app that was originally simply sort of a way to pay has become today a sort of a super app, which is your online banking, Groupon, and sort of a lending vehicle where you can buy also insurance and do a lot of things together. And sort of the key of that is data, of course. So the very same issues, actually, when we're talking about Indonesia, when we talk about Philippines, Vietnam, Malaysia, the very same issue sort of was fundamentally there. So people didn't have access to financial services because there was no data about them. So nobody knew, and it was cash-based economy, still is. But if it's a cash-based economy, then if you have to lend somebody money, you're not sure whether you're going to get your money back or not. And those super apps actually made it happen. So they started off by piggybacking on top of something. So of course, Alipay was connected to Alibaba. But when we're looking Southeast Asia, then a lot of those super apps started as a payment method, which was attached to a ride-hailing company. So when we're looking GrabPay and Grab, when we're looking Gojek and OVO Pay and many others. So they managed to get access to a lot of users, and basically through that, they understood what's the human behavior, how much the people are spending on ride hailing. And out of that, they managed to get a critical mass of users who didn't use sort of, let's say, GrabPay because they could pay for it, but they started using GrabPay because they wanted to use the taxi service, so-called. And And out of that, of course, they built a habit that actually I can use my app and get discounts with that as well. And on top of that, just like Alibaba did or Alipay did back in the days, the next logical step was giving out sort of those smaller loans. So when you already have an understanding, you can have some sort of credit scoring system on top of the user behavior, how they're using their wallets. And when you have that, you can already give out inexpensive loans to people because you have better understanding whether they pay it back. And of course, everything comes from there, insurance and everything else. So from the context of hackathons, then what we've seen is that also in Southeast Asia, there have been a lot of telco-based wallets. But the biggest issue has been that they are also sort of rather independent. But what has fueled the growth in Southeast Asia mostly is the connection with the different services, which are sort of agnostic of the telcos or go across borders, and where there is a natural human behavior behind it. And there, companies can get access to consumers, can get access to data, and then other pretty amazing things can sort of come out of it. And of course, identity is one thing around that. It's not as powerful as some digitally signed document, but these are the users who are using their taxi 3 times a day, and you pretty much have a pretty good pattern and understanding how they're living.
Yes, so I want to make this comment around understanding user behavior, because I know like with the mobile payment and like when it happened in Africa, especially when it started with M-Pesa, a number of other countries tried to replicate it. And we have seen like traditional legacy banks in South Africa trying to initiate that, and it didn't work for them because there was this lack of understanding of the mobile approach to it. But maybe here it's good to also have Aitoa, since she actually works with a lot of innovators and disruptors in the Nigerian market, and maybe she could share some similarities from there.
Okay, thank you very much. Yeah, so speaking to what Martin had talked about on user behavior, very, very true. Okay, so if you look at the markets across Africa, there are different use cases or pain points. I think the primary use case in the Kenyan markets was that there was a need for those in the urban areas to send money to their relatives in the rural areas. And so the M-Pesa model worked for them. In Nigeria, for instance, that model did not work. Most of the people you send money to, there's already a model to send money to them. They are very informal people in Nigeria. They just go to the motor park. My mother will come and meet you at the bus stop, give her this money. So they did not see the need, right, to do a transfer that was also expensive. The cost of the services was quite high, very close to what the banks were charging at the time to do that. But there were other use cases that would have worked. So for instance, there were merchants that could not have a presence online. And so what Paga did, Paga is one of the mobile money operators in Nigeria, and they have expanded to other African markets, was to integrate their mobile money into a payments gateway. And so merchants would have access online. And because of that, their transactions grew. So it's also about the use case or the pain points in a particular market. You have to understand the behavior, just like he has said, before you can try it. You cannot really replicate a model in another country. Another challenge was that are dominant and they have presence almost everywhere. But financial inclusion is expensive. And that's why the whole world is talking about it, if you ask me. It's expensive. It's not lucrative for the banks alone to just drive financial inclusion. And that's why Bill and Melinda Gates Foundation, UK-Aid, and several other and gateways have been able to give grants or have tried to empower that space so that people will pay attention to financial inclusion and try to drive it. What innovators are doing is that once they understand the behavior in a segment, then you create a solution that is about your lifestyle. So I will give you some examples that have worked in Nigeria, which you would wonder, is this really working? PiggyVest started as Piggy Bank, and they tried to solve a problem for millennials. Millennials found it difficult to save. So I have 1,000 naira, for instance, maybe like $200, and I'm trying to save it. I can't take 1,000 naira to the bank every day to save. I need a means to save that. They had to look at the value chain. How do we digitize cash? First of all, how do we digitize cash in a way that is not expensive for the people who want to save? And then what is the incentive to save as well? So for some other institutions like Barclays, the incentive to save was that once you save, you can save towards a target. Okay, so you can save towards a target. So for instance, I want to buy myself a phone by March next year. For instance, I like this smartphone, the Samsung smartphone, maybe the latest phone. I don't have the cash, but there's this model where I can put the money aside on a daily basis. My uncles, aunties, relatives give me money. I put the money aside. They lock down the price for me. So they have an agreement with the merchants. They lock down the price. And once they have locked down the price, I say it might take me up to 6 months to save. I still get it at that actual price. A traditional financial institution cannot do that. So it's actually understanding the sentiments of the individuals, understanding exactly where their pain points are, and trying to meet them halfway in resolving these issues. There's also a problem of trust. So there are several charges, and we hear customers complain, we hear users complain about charges. You see a charge like a hidden charge, you don't know what the cost is. Even when the central bank tries to regulate the pricing regime, the incumbent players come up with another name. So you can't tell what particular charge is this. So I think that the costs of financial services should come down. Mobile money is not thriving across Africa as it should. It's traveling in some countries, I would say, and maybe in East Africa. But to Pierre's point, if we can achieve interoperability, and so I'll tell you what I mean. I can't go to Paystack, for instance, and see the option to pay with mobile money. I see MasterCard, I see Visa. I don't see mobile money. If I visit a traditional merchant and I want to make a payment, there's no option to pay with mobile money. So it's not yet part of the system, part of my lifestyle, okay, my lifestyle engagements. If I bought a taxi, the option is either pay with your card or cash. There's no option of mobile money. So that integration, that interoperability needs to happen. And once it happens, we'll see the uptake of digital wallets more than ever before in Africa, and especially in Nigeria, which I believe is the biggest economy in Africa. So handing that
Thank you so much.
back to you.
Yeah, thank you so much. Yeah, you mentioned a lot this it's known that cash is actually the competition for financial services and fintech in general. I know, for instance, in Morocco, the production of cash itself was around 1.6% of the GDP at some point. And like we talked also about the informal market that's mostly powered by cash, where taxes are lost, where corruption could happen. So it's good that you mentioned understanding the market is very important and bringing up solutions that could solve it. Maybe this question will be a bit of a zoom out of this conversation, and it's more to the entire panel is, we know that there are clear disparities between access to financial services in different regions in the country, but also specifically rural and urban areas, and also the gender gap. So how could we close that, and any thoughts on that?
Okay, so I think that we need to be deliberate, if you ask me. So at FSI, for instance, we're planning a hackathon that is focused on female entrepreneurs in the North. Several of them have small businesses, and most of them feed their families. And there's a saying that goes that if you train one woman, you train a lady, you train a generation. And I think it's true, not just because I'm female, but I think it's true, because we'll think about ourselves, think about our children and all of that, And so that's why we're putting this challenge out there. The promotions will go out very soon, early January, the promotions will go out. So we have to, first of all, have to be deliberate and then develop solutions that are focused on that segment of the market. That's how we can close that gap. There are needs. So especially in the northern parts of Nigeria, for instance, there's a cultural bias. Women may not have to come to the forefront to say, I'm this, I'm doing that, and all of that. So you have to develop solutions that they can use from the comfort of their homes, and that maybe solutions that gives them tips. So if I'm the one developing the product, give them tips on how to cook, tips on how to manage their hobbies and all of that. And so when their hobbies see, oh, this solution is also educative, it doesn't put you in a place where you are competing with your spouse, because there's a cultural bias generally, women have to be under and all of that, but you want them to come to the forefront. Then I think that we'll be able to close that gender gap. So one thing is we have to be deliberate about it. Standard Chartered, for instance, they have products focused on females. And so that is something I think that we need to do to unlock the challenges they have. I've been to markets where you find women doing so well, but the business is still largely cash. And when you ask them, why is your business cash? They want immediate value. And so this is a twist to this. This is why the card payment infrastructure is expensive. So in Nigeria, I think in other parts of the world is even better. So that I'll give you an example. In Nigeria, for instance, settlement of merchants is T+1. So that means if I do a transaction, T+1 working days taken into cognizance. If I do a transaction on a Monday, the merchant gets settled on a Tuesday, right? I know in other parts of the world, it might be even be T+4. That can work for large merchants, big merchants, because they're already liquid. So they don't need access. So they don't need money every day. They don't need access. If there's a public holiday, then it's plus that holiday before you get cash. The average Nigerian wants to see his money online real time. So you need solutions that are near cash. The second challenge I see is that even though we are almost solving the financial inclusion problem, an initiative was launched by the Central Bank in Nigeria in collaboration with all the banks called SANEP, and they were supposed to release about 500,000 agents by the end of 2020. Maybe it will expand to next year now because of COVID and the issues that came with COVID. But I don't even think that alone will solve the financial inclusion problem. What about the underbanks? And when I say underbanks, okay, I open an account, the money is in my account, but I go to an ATM and I draw all the cash, and I still do all my transactions in cash. If I do all my transactions in cash, I've still not helped the economy. I've still not contributed my quota. All my transactions are outside the government radar. I'm going to be an expensive account to the service providers. And so the integration of the businesses at different layers is very important. The small merchants, the micro merchants has to understand that, even from this super app, just like Martin talked about a super app, I can order for goods from my suppliers. Even from this super app, and the Chinese people understand lifestyle apps very well. Even from this super app, I can inform my customers that what they were looking for, they currently have it. So taking care of those other needs apart from payments, because payments payments become a commodity, if you ask me, eventually. But every other thing around payments, so even when you democratize payments, every other thing around payments, the processes around payments, if those processes can be digitalized, and if those processes can be integrated across Africa, and I think that with the advent of blockchain technology, that can happen. One of the reasons why, I'm going this way, cryptocurrency is thriving is also because it's neutral. It's a neutral currency, and so the market determines what happens. No sovereign authority can determine what happens in that space. It's a case of supply and demand. So I think that we need to solve that problem. The value integration. There has to be a value integration, looking at the value chain. And we have a number of innovators looking at that value chain and solving that problem right now. And once that problem is solved, then you have more people into the system. And one way to unlock that is access to credits. Access to credits is one way to unlock that. Just one comment before I hand it over to you, Boya. So there's a solution that's one. She's not an innovator directly under FSI, but I think I like what she's doing, Mama Money. So she calls women together, right? She empowers them. She teaches them business, finance, how to make a living. Maybe you just sell vegetables, groceries, how to make a living from it. Once they've gone through that program, then she empowers them with cash, which they pay back every week or every 2 weeks. And so a lot of women are getting integrated. So all of those challenges around using a payment service needs to be resolved first before you can see that uptake and value chain integration. Thank you very much, Boya.
Yes, maybe Pierre, you have also some comments on this question, right?
Say again, Buya, you want me to go next?
Yeah, like you probably have also some comments on this question around the gender gap, closing that gap, and for rural and urban divide.
I do. I don't know whether I have really the solution, but I can attempt to at least give a couple of views on this. So let me just focus on the gender gap. The gender gap is pervasive. Across regions we still find it. There are exceptions to it, right? For example, the Philippines, where we don't see it that pronounced, quite the opposite. But in Africa, at least for mobile money, for example, if you trust the Findex data, the gender gap is about 11 percentage points, which is quite huge. And I would know a lot of what I just said resonated with me. So I would just make 3 points, right, where I believe we have levers to reduce that. The first point is about reducing obstacles to access for women. And what we see is that in some countries, there are still restrictions, or it makes it more difficult for women to open, for example, bank accounts, right? Because they need the husband to co-sign in order to open a bank account, or certain documentations are required that are just more difficult to get. And the World Bank has been tracking those obstacles through a database, which is called Women and Business and the Law. That is something where I do believe that's an area we can focus on, besides the areas, and sometimes they're rooted, of course, in cultural biases. But it certainly sometimes it may still be there, and it has yet to be rectified for to make it easier for women to actually access those financial services. The second point is certainly around education, right? And I think I just made that point very well, right? If you educate one woman, you have a large impact and multiplier effect. And that starts early, right? That can start in schools. And there are great initiatives out there, like ComFed, which has been focusing on girls' education, and then adds to that also how they bring that into their lives and financial lives and business lives later on, which I think is very, very important, right? Because I mean, and that certainly can happen at all stages, right? That can happen in school, that can happen later, and wherever we find those opportunities, we should certainly seize them and support them. And then the third point is really about what financial services providers themselves are doing to cater to women, right? And what we've learned here, and at the IFC, we had an initiative, Banking on Women, because we realized that many banks don't even understand how they are creating their own obstacles for women to access the financial services, and that it's sometimes very important to invest in dedicated marketing and offerings and outreach to women to really tap into that client base, right? And that for banks, but also other financial services providers, that can often be the single largest untapped market. Because it is indeed, you have that gender gap, and if you really go into that, right, it can create actually not just benefits for your clients, the women that you then serve, but also for the banks in terms of adding to the bottom line, right? And there, I used to be on the board of the Global Banking Alliance for Women. There have been tremendous experiences around the world of how banks have reaped that, right, from Westpac in Australia to many microfinance providers in different emerging markets, right? And I think there's a big gamut that we can see. But tapping into that opportunity from a financial services point of view, from a bank or financial institution point of view, I think is important, and really then doing that right. Of course, we can talk about this a lot more, because that requires an investment on the side of the bank and an awareness on the side of the financial institution provider, but it's certainly doable. There's great examples out there of financial institutions that have done that.
Thank you so much. And actually, I'm glad that you mentioned education, because I think it's still understated in a lot of the conversations around, especially like the financial inclusion. So financial literacy is still a big challenge in the African continent, and we see the impact of it when, for instance, we talked about insurance and closing the protection gap. So a lot of people don't even understand the importance of insurance and why they should go and get insured. Maybe to you still, Martin, is around like maybe alternative credit scoring solutions you have seen in the Southeast Asian market that could be implemented potentially in Africa, because that could also help in solving this gap. And
yeah, sure. So sort of, I would come back to the original question in a way. So if the question was sort of that there is still everybody's not equal, and it depends where people are living. And when I sort of made an example through the ride-hailing companies, then yeah, one can say that in rural areas, like, people do not need taxis specifically, or don't use them so much. So one thing, I mean, M-Pesas and others are in a sort of off to a good start. So I mentioned also interoperability, but one thing when we're looking purely from the infrastructure perspective, then in every country there are companies who are sort of getting access, regardless how well or they're doing, or even if they're doing bad, they're constantly getting access to more and more people, and to a younger and younger generation. So and these are mobile network operators. So today, sort of everybody is using their mobile phone one way or another. Mobile phone is, I think, or telco services are one of the most widely used services across everything else. So it's used for communication, so it's calling, texting, but more and more people are accessing internet these days more through their handset devices and through telco relationships. So if we're looking sort of what's the common denominator, or what's the sort of the base layer across all the people, whether and in that case that could bridge the gap between gender, between sort of whether the people live in the cities or outside of cities, and so on and so forth, then actually they all have something in common. They use telco services. Of course, there are people sometimes in rural areas, also in the cities, who do not use telco services yet, but actually sort of the rate of people adopting different telco services is increasing. Second interesting thing is that telcos are today in a very, very interesting place where, as I said, even if they don't service their clients amazingly well, then they still get every year new and new consumers because people need telco services. So one option is, if we want to expand the financial services to equally across the country, then one option is to use the telco infrastructure and the user base. But what's been done in actually in Nordics is that from the payment perspective, all the telcos have joined hands. So they have created a joint company in a way that they wouldn't compete with each other, because then we would be still in the very same place where everybody would build their own infrastructure in silos. So back in the days in Europe, it was the same thing, at least in Estonia. So it's a country of 1.3 million people, and we do have 3 mobile network operators. And they all started building their mobile infrastructure separately. So putting up their towers. So Estonia is not a very big country, but all the three telcos basically had to put their own towers, and they weren't sort of very far from each other. One option could have been that they joined the forces and we could have like 3 times less towers, and we could focus on the quality, and then not sort of have the mentality that I need to own my own towers and I need to have the control. So it's a collaboration. And one option is also that when there are sort of joint collaboration between the mobile network operators, then we're able to cover pretty much the whole population, 80%, 90%, depending on the market. And that could sort of make wonders. But of course, I think the key there is that there has to be a driving force. But yeah, one option to sort of reduce the differences between different demographics and depending on where people live, then one option is to sort of use the telco infrastructure, telco user base, and sort of build things on top of that. But I truly believe that in that case, that has to be a joint effort, because if those things are built separately, then we end up in those silo towers again.
Yeah. So yeah, one way is actually to leverage the telcos, as you mentioned, but the other way is to actually build the infrastructure itself. So in many countries, that infrastructure is still missing, sadly, and there is a lot of work to be done around connectivity. Maybe because we are running out of time, as a closing question to the panel would be around the EU-Africa collaboration. So as you know, this is at the core of this conference. Maybe you could share what you have noticed as efforts from the EU or the international community at large, and the impact of that on the African market. Maybe Aitoas could kick off. We can't hear you.
So what I've noticed, sorry, I was on mute. What I've noticed from the international community markets in recent years, there's an NGO in Nigeria called Enhancing Financial Inclusion and Access, and they have been funded by UK Aid through DFID, and as well as the Gates Foundation. And that money over time has been used to fund fintechs and several other aspects of the sector. So it has been used to fund the agri sector. They have been able to advance monies to people in the health sector, but likely fintechs. FSI is the beneficiary of their fintech grants. Recently, they launched a COVID grant, £2 million, and they are focused on food, they're focused on health, and also fintech financial services to ensure that MSMEs remain liquid. So I think a lot has been done in terms of collaboration between the EU, international community, and the African markets. European Investment Bank also has invested largely, I think about 1.1 billion euros in Africa as well, to see how we can support the financial services sector and other and micro, small and medium enterprises as well. So I think that's what I can say to that. We expect to see that collaboration also increase. EFINA has funded, apart from, there are two ways to fund it, where you give grants or you invest and expect equity in return. So we've seen them do both, donor grants and also invest as VCs to see a return on equity. And that has empowered a number of startups in our ecosystem.
Thank you. Pierre, if you have any words on that.
Sure. So, no, obviously Africa stays high on the agenda for a lot of bilateral and multilateral partners, whether that's the World Bank Group, IFC, also foundations, of course, the MasterCard Foundation, which is very much vested in the continent. We heard of the Bill and Melinda Gates Foundation. But in the spirit of your question, right, where's the unique link between Europe? Now, European banks have been investing in Africa for a number of years and has been profitable for many of them. But I think there's certainly an opportunity, for them to do more, right? And I think they've been partly overtaken by their telco neighbors, also out of Europe, some of them who've invested there, to really go beyond the traditional segment of catering to government and large companies, but really providing, services to all of the population, including small to medium-sized enterprises, right? And I'd be very happy to see more partnerships, and in the spirit of a hackathon, maybe not just from the large institutions in Europe, but really much more broadly across also the venture and the startup community, right? Because a lot of the innovation that is coming out of Africa, and we heard, I think actually maybe we haven't heard it because that was a conversation we had just before we started, but a lot of the talent that we have there, a lot of, Africa is a very young continent, right? With a lot of talent of young people who are really bright and smart, and given the right opportunities, will surprise you and do wonderful things. So I think this is where we may also want to look at the link to Europe from the startup venture and VC community to see how those partnerships can be developed and supported and funded.
Thank you very much. Martin?
Yes, so I will again take a slightly different view on the thing. So I think everything which is covered is very, very accurate. So maybe just trying to add a different flavor. So again, continuing, we're sort of pair finished. So young continent, a lot of talented people, and then from one side, sort of, I think a lot of those hackathon type of events, which have been extremely popular in Europe, and then now sort of we're doing more and more joint events. So I think this is definitely sort of one of the things that to import, and the impact is that we're sharing young and talented people a lot of great ideas. What has happened, what is happening outside of the continent, what are the best practices, so that everybody could sort of get their minds around it and add their sort of local flavor to it. So I think it's very important that wherever we do it, we acknowledge that there is a life beyond our country or continent, and the sort of the most successful things are that we're taking what's working well elsewhere and adopting it and making it even better. So that's why I think so that those hackathon type of events are great, where we bring people together, but also getting the external knowledge. And one thing sort of, I'm from Estonia, where Estonia is extremely tiny country. And one thing which, when we have to build businesses or build something, then we always need to understand how does that sort of click in other markets as well. So there's absolutely sort of no point to do something technological only for Estonian market if you're doing it on a commercial perspective. But one thing what our government has done for Estonians, and now sort of exporting that know-how to other markets, is everything around our digital identity, which actually allows us. So and a lot of commercial businesses are using that digital identity, and this is sort of from the government's perspective. Everybody can vote online. Everybody can sort of, like, it was actually funny to look at those long lines in US elections. Whereas if I have to do a sort of give my vote, and I open a program and two clicks, and then I've voted. The very same goes for tax declarations, and it gives a sort of trail, e-signatures, where we can digitally sign the documents, which sort of makes the whole communication with the government so much easier. So to order a new passport, new ID card, to have any type of interaction with the government, it can be done digitally, because there is one trusted ID which is issued by the government, and it's also sort of the whole management is done through that. And that has created a situation where a lot of companies are also sort of using that identity. And I know that the Estonian government is also helping many other countries and countries also among Africa to adopt something similar, which could help to solve the identity part of the identity part of the problem in internet services.
Estonia is very pleased to hear that answer. And actually, it's very relevant to our conversation. Sadly, it goes missing and we are running out of time. But identity in general is a big problem in Africa. So more than 500 million Africans remain without an identity. And without it, you can't do like the KYC checks, the know your customer regulations, so you can't access banking. So it's a very important topic to this panel. And yeah, I think probably we'll leave it for another discussion. And this is it. I know the World Bank also has an ID4D initiative, but that's all from our side. And I thank you so much for being present and have a nice day.
Thank you very much. It was a pleasure.
Thank you.
Thank you.
Bye.
Bye. Thanks, everyone. Bye.
Bye.